Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 13, 2021. Happy weekend. Hope you're having a good weekend. So we'll talk about Celsius Holdings. They're into non-alcoholic beverages. As you can see, they got great looking aluminum cans, tall, slim. These cans fly off the shelf in Target, Walmart and local gyms. I think a lot of people love to drink Celsius here. That's why this is very much in demand. With that, let's jump into Celsius and see if we can buy the stock here. So as you look through here, we will talk about company overview, major ETFs holding CELH or Celsius, competitive landscape, review few charts, look at the deep dive of this company, and also review the financial summary and stock performance. Finally, let's go with the verdict here, whether we should buy or sell or hold this stock here. So with that, let's jump in here and get started. As you look through the company here, Celsius Holdings, they are into calorie burning fitness beverages, in the United States and internationally. They got various flavors as you can look through here. They got carbonated orange, wild berry, cola, and so on and so forth. A lot of people I know they love many of these drinks here. A lot of these flavors are very popular of late. So with that, they also sell into health clubs, spas, gyms, military, and most of these places are opening up nicely now. That should give a nice tailwind to this company. Stock price is $83 and market cap is around $7.27 billion. Look at the chart here, nice looking chart, higher highs, nice higher highs. This company does give you good opportunity to buy. Look here, big drop, buying opportunity, went up again, drop again, buying opportunity, dropped again, great buying opportunity, went up. Now there's a big dip. What do you expect will be next year? So I'm sure this will bounce back nicely. So that's why I'm really thinking this is a great company. We should look for these type of bumps here and accumulate and go from there. As you look through here from an analyst consensus perspective, we got 4 buy, 2 hold here. It's a moderate buy at this time. And what happened here? Celsius holding stock down 19%. They got some mixed results here. As you can think of, there's a supply chain issues. Aluminum prices are going up, and the ports are all backed up here. And they got some, issue with the margin pressure. I think that's why stock kind of came down tumbling. It's a great opportunity to buy some. We'll really review a little more and see if it's really worth buying at these levels. With that, let's jump in here. Why did Celsius holding tumble? That's the big question here. So let's look through here. The fitness drink maker Celsius posted a mixed earning report, and stock plunged 23% in 1 week time. Look here, 23% drop. North American market delivered a nice revenue boost here. International markets are also held firm here. That's a good sign here. Margins and earnings were reduced in Q3 by supply chain problems. This is the big theme in most of the earning calls here, and Celsius is no different. They got issues with the supply chain costs here. That's why all the raw costs. Think about aluminum. Think about transportation. All increased as of now. That's why they got margin pressure here, and they also because of this they had to sacrifice their margin here, and they think it's a one time in nature. So I think that may be the case here. That's why I think it's a good opportunity here. Stock came down 23%. It's a great company. I think it's a good buying opportunity. We'll jump in and investigate further. As you look through here from a leadership perspective, we got John Fieldy here. He's the CEO. Lot of experience here in the consumer goods industry. He's got over 20 years of experience here. He also has financial and operational experience. So I think he's the right guy for the job here. Yeah, and he was also in various roles within Celsius Holdings, and he drove robust business results here. So that's why he's the right guy for the job. He can get the job done. And then you got your CFO here, Mr. Edwin. Looks like the right guy for the job here. And we got your sales guy here, Tony. I think he's doing the right job here. Revenue growth across the board. As you look through here, we got a lot of these exchange traded funds holding Celsius holdings here. Look here, we got IWM, Russell 2000 here, small cap, nice position. We got S&P 500 small cap here, nice 240 million here. Look here, a lot of these mutual fund companies, ETFs are holding a good amount of Celsius stock here. I think it's a good sign of confidence from these big players. So with that, I think it's a good sign here. All these big guys, they want the growth, and Celsius Holdings is delivering the growth. That's why they're holding the stock here. And as you look through here, let's look at the competitive landscape and see from there. So as you look through, we got non-alcoholic beverage industry here. So in the non-alcoholic beverage, as you look through, we got various players. I have sorted this by 1 year performance here. Two stock at the top here, Oatly and Coco. They're newcomers. They don't have 1 year performance yet. But look here, Celsius Holdings, great. 237% performance even after this big huge drop here. And then you got CEEP, Coca-Cola here, and a couple others here. And as you look through here, we got one more here, Monster Beverage, which is a competitor, 9% in 1 year. So that's why it's a compelling market here, and Celsius Holdings has got a top spot from a performance perspective, even after this huge drop here. And next, let's look at a few more here. Now we got here alcoholic beverages companies like Samuel Adams, Molson Coors, ABEV, and so on and so forth. Keep looking here, 1 year performance. All these folks have done not so great here with the Samuel Adams here, Boston Beer. Boston Beer is down big here. It's a compelling buying opportunity here. Stock is turning around. I would recommend you to look at Boston Beer here and buy some SAM. And as you look through here, we got a few more here. Keep watching the RSI levels as usual. RSI levels for some of these companies are a little high here, like TAP, ABEV, and so on and so forth. But you could still buy Boston Beer and even FMX Fermento. That's also one of my favorite stock here. Nice sales growth, nice gross margin. You could buy this company also. As you look through here in the non-alcoholic, keep watching the RSI levels, and Celsius is just 50. You could buy it right here. So with that, now let's look at some of these wineries here. We got NAPA. NAPA is, as you can see here, down 11% or up 19% for the year. Then we got STZ here, one of my favorite stock. As you can see here, it's also just 3% down. RSI 67, as you can see, stock has been moving up of late. And then you got VWE. It's a little newcomer here. For 6 months, it's done 15%. So with that, by looking at this landscape, I feel like Celsius Holdings has a fair shake at leading the industry here and show positive growth as we go forward. So with that, let's jump in and look into a little more details around Celsius Holdings and see if it's worth buying here. So let's look at the competitive landscape here. We got Celsius Holding at the top here. As you can see, a nice looking chart here, higher highs, as you can see here, and higher lows. But now stock has dropped, as you can see here. Now it just came below 100-day moving average here. And keep watching the on the balance volume here. On the balance volume tells you whether folks are buying the stock or selling the stock. As more and more folks buy the stock here, on the balance volume stays steady or goes higher. So here, even after this drop here, there's a small blip in the on the balance volume, but still it's going strong. We love to see on the balance volume going higher or steady. With that, I think Celsius Holdings is a great one here. Right now, it's a huge big drop. On the balance volume is pretty much steady here with small dip here, which is understandable. Keep watching here. Nice sales growth. When it comes to 1 year, quarter over quarter, nice gross margin here, 45%. And look at the net margin. Company is making money, 6% net margin. Very low debt here. That's why I think it's a good company to buy at these levels. Keep watching here. We got 14% in 1 day, 23% in 5 day. Huge big drop here. Still managed to have 237% in 1 year. That's why I think it's a great compelling buy here. And then you got Coca-Cola here, CCEP. As you look through here, this is also a good buy. RSI is a little high for me. I would wait for a little more pullback here. Given RSI 60 here, a little high for me. And it also has a good on the balance volume here. Tells you folks are buying this stock at these levels here. And then you got Monster Beverage here. It's again a great stock, a formidable competitor to Celsius Holdings here. A lot of people love to buy Monster drinks. As you look through Monster here, RSI 68, that tells you stock is a little hot here. Look here, they got a quick uptrend here and gap up. I would wait for a little pullback in Monster before I buy Monster Holdings. And then you got KDP. I love KDP also here. Keurig, a lot of people love Keurig. Nice on the balance volume here. Folks are buying into that, indicates folks are buying into the stock here. KDP RSI is 53, which means you can still buy KDP here and take it from there. And we'll look at some more here. Let's look at Samuel Adams. This one is a no-brainer. I would slowly recommend buying this and accumulating. Little high price stock, as you can see here, $479 price tag here. But it's a great stock, great long-term growth story here. You could buy some and sock it away. And then you got NAPA here. It's a winery. As you can look here, NAPA came down a little bit. On the balance volume also dropped here. Now it's recovering. As you look through NAPA, RSI is 45. You could just buy NAPA and take it from there. You should see a nice bounce back here. And then you got Fermento here, one of my favorite stock here. Stock has come down off late here. RSI is 44. On the balance volume is pretty steady here. I would buy some Fermento here, FMX, and take it from there. Next, we got a new entrant here, Coco. Coco, as you can see here, it's done pretty okay in last 2-day, 5-day, and 10-day. A little bit newer IPO. I would recommend buying some Coco, low price stock here, and take it from there. So with that, let's jump in and look at Celsius Holdings and do a quick deep dive. As you look through here from a snapshot perspective, its price is around $83 right now. And as you see here, they got some short float here, 6%. That means there are some short sellers here. Company stock can go higher and squeeze these folks out here. And put call ratio is 0.22. That tells you there are more call option buyers than put option buyers. That's why it's bullish right now in the options market. Folks are betting the stock will go higher. Look here, target price is $100 still, and current stock price is 83. That tells it's a compelling value at these levels. And beta is 1.96. That means compared to S&P 500, this goes almost twice or double the S&P 500, either on the higher side or lower side. So that's why it's a great story here. Nice volume. You can trade this in and out. Very good volume. Very liquid stock here. And as you look through here, we got sales $188 million here. Nice quarterly sales growth, and year-over-year sales growth is also great here. And past 5-year sales growth is also great here. And they got nice margin. Both gross margin, operating margin, and net margin. Company is profitable. It's making money. And as you look through here, we should not look at PE ratio for this company. Instead, we should look at PS ratio, price to sales ratio. I think it's okay here for a great company like Celsius Holdings. A little higher, but it's completely manageable here. And as you look through here, we got next year earnings growth 132% here. That's all. That's great here. This year earnings growth is a little bit less here after this drop and some supply chain challenges here. RSI 36 tells you it's a very good buy. Stock is sold off at these levels. And then let's look at a few more here. As you look through here, debt to equity ratio is 0. That means very low debt. They got $84 million cash here, just $1 million debt, which is completely manageable. As you look through here, the free cash flow negative. I think they should turn this situation around here. And both return on asset and return on equity is positive. I would love to see this in double digits. This tells you the effectiveness of management here. As you look through here, you got return perspective, 1 day, 5 day, 10 day, and 1 month performance all negative after this big huge drop here, and managed to do very well in 1 year, 236% here. Look at the 2 year performance here, 1958, great performance here. And as you look through here, looks like insiders are selling their stock here. That's not so great news here. But institutions are owning nice chunk of stock here, and institutions are also buying, this stock here. So overall, from a snapshot perspective, company is profitable, and right now stock has fallen down. Huge big drop in last 5 days here. Could be a compelling buying opportunity here. Now let's look at numbers here and see what we can make out. From a numbers perspective, from an earnings per share perspective, as you can see here, companies doing well. They are making money. It's a profitable company. I would love to see this to be a little higher, but it's manageable here. This is as of 2020. We had some issue around COVID-19. That's why you see a little bit of tepid number here. As you look through here, annual sales, nice clip as you can see here. I love this clip here. They're doing great job selling Celsius brand here. And from a shares outstanding perspective, I can take this increase here. Given the top line is growing here, sales is growing, it's okay to have a little bit higher shares outstanding, no biggie. And as you look through here from a quarterly revenue perspective, nice quarterly revenue here. They're doing great here, selling Celsius beverages nicely. And they're also spending money on R&D, which is always good. Companies like Celsius, they got to test the market and bring new products to the market. And as you look through here, quarterly income, as you look here, we got 4 million here in 630. This is not the latest quarter, but quarter before, which is pretty okay, not too bad here. Out of 65 million in revenue, they made $4 million in the net income, which is not too bad. So with that, let's jump in here and look at Celsius Holdings. As you see here, performance is not great in 1 day, 5 day, 10 day, and 1 month, but did great in 1 year. And let's look at some of these numbers here. From a market cap perspective, it was a $243 million company here. Right now, it's about $6 billion company. That tells you company is really nicely growing their market cap and taking the market from the competitors and growing nicely. And from a price perspective, this was a $4 stock back in 2019. Look, now it's an $83 stock. So that's a nice growth in the share price. Also, it will appreciate, it will really reward the stockholders. That's a great news. And as you look through here from a sales perspective, nice sales clip here. Look here, $14 million sales back in 2019. As of 630 here, 65 million sales. That's a nice clip here. They're growing their sales, very steady Eddie company. And sales change is great here. Look, 116% sales growth. I would take this anytime here. Nice sales growth. And they're also doing nice on the earnings per share here. And earnings per share surprise is great here, 400%. And as I look through from a cash position perspective, they got a lot of cash here. Cash situation improved, as you can see here. They have some debt, which is very, very, very low here. That's why debt to equity is so zero here because of low debt. As you look through here from a cash flow perspective, I think they should improve the situation. They're improving, as you can see here. But right now, I think cash flow and operating cash flow, they are a little bit negative. I would love to see them improving the situation here. Gross margin is doing okay as of now, but in the latest quarter, they took some hit on the gross margin here. We'll see how it goes. Operating margin and net margin, they're okay, but in the latest quarter, this also came to some pressure. So with that, as you look through here, their return on asset and equity is positive here, but the trend is not great here. I would love to see this improving. Right now, it's decreasing a little bit. I would love to see the situation improve a little bit. So with that, let's jump in. From a net perspective, I see a rapidly growing company taking the market share from the competitors, and they have to improve their efficiency a little bit, and turn the situation when it comes to return on asset and return on equity, and have this in the double digits. But overall, great company. I think it's on a sale right now. We should jump in and buy some. As you look through here, PE ratio perspective, companies like this, you cannot should not look at PE ratio. Instead, look at price to sales ratio, which is very much manageable. I think it's okay. So with that, let's jump in here and look at the quarterly earnings. From a quarterly earnings perspective, we had the call on November 11th here, and they missed earnings by 4 cents here, and they beat on the revenue by 19.94 million. That's a great beat on the earnings, on the revenue side, and a small miss on the EPS side. But as you look through here, Celsius has received or achieved a great sales record here, and they had 50% record when it comes to revenue perspective from the previous quarter. That's a great record here. They're beating by 46% growth here. So I think it's a great accomplishment. They're doing great. But doing great does not come without the cost here. Because of the issues in the supply chain, they have to sacrifice some of this margin here, and that's why they think the margin effect is a short-term phenomenon. That's why Wall Street did not like it. The moment Wall Street heard they're sacrificing the margin here and the efficiency, Wall Street freaked out and stock came tumbling down. And one of their long-term cost is really around this 6 distribution warehouse centers here. I think it's good to invest in these distribution centers. Company has to get the scale and be the global leader here. That's why they're investing in this. That's one of the primary reason for this margin hit here. I think it's a great way to invest in the company. I think it's a plus sign. It's a plus as we go forward. And as you look through here, they got freight costs which are more understandable. There is a shortage of truck drivers, and energy costs are rising. That's why they got some issue in the freight cost here. And also aluminum prices are soaring here. That also impacted their margin. And as you look here, they think these are one-time margin issues here. Total margin is really impacted by 7.5%. That's a big number. The moment Wall Street saw margin came down by 7.5%, Wall Street freaked out and stock promptly came down big time. And on the positive side, in Amazon.com, Celsius is second largest energy drink here, only behind Monster Beverage. I think it's a great story here. Overall, company doing great. They have to take some short-term hit due to supply chain issues on the margin side by 7.5%. Wall Street did not like it. Overall, great growth story here with a short-term hit on the margin. As you look through here from an earnings history perspective, company missed by 4 cents on the earnings per share here, and they beat on the revenue side nice by 19.94 million here. And year over year, look at the revenue growth at 157% here. That's a great revenue growth here. And the company has been very predictable by Wall Street. Most of the time they beat on the revenue. Once or twice they missed on this EPS. Whenever they missed, stock came tumbling down, and promptly and briefly, it went up again. That's why this time is no different here. They have missed in the past. As you can see here, stock came down and bounced right back. That's why I feel it's a great buying opportunity. And as you look through here from an insider perspective, look, we got 10% owner here. Carl is selling a lot of shares, 183 million. Looks like he got some, we got one more guy here selling 183 million again. And we got director here selling 9 million. Look, a lot of these insiders are selling here. I think it's a little bit on the higher side. I've seen insiders selling, but here insiders are selling 96% here. That's why it's a little bit on the high side. That could be also putting some pressure on the stock here, but overall has done great. As you can see here, 1 year 237%, 4 years 4000% here. Great growth story here. That's why even though I don't like too much insider selling, in this situation it could be okay. It's a growing company, and some of these insiders do need some money from time to time, which may be okay, but a little bit on the high side. That's why I'm not super happy about so much insider selling here, but it's manageable. Now let's look at the performance here. Look here, very nice performance. 2017 won 14%, 2018 it took a hit here but never looked back. 2019 nice growth, 2020 a banner year here, 2021 so far 65% growth here. I think it's a very good performance here. It's a rapidly growing company here. A lot of people love Celsius drink, and if you go to party or gym, you always see Celsius drinks flying off the shelf. As you look through from a monthly performance perspective, anytime there is a small correction here or a pullback, it came roaring back. Look here, 11% drop, 60% improvement again, 19% drop in March, 19% bounce in April, 9% drop in July, 19% bounce here. I think this time is no different here. You should see nice bounce back in December, January, as more and more folks are going out and having fun. They will start drinking Celsius, sending the stock even higher. As you look through here from a weekly performance, you'll see some red here, but all the red is followed by a nice bounce back here. So that's why this stock knows how to bounce back. All the short-term drops are really buying opportunities here. And if you look at daily performance here, ouch, look here, we got 14% drop on November 12th here. That's due to earnings miss. Even before the earnings call here, there's some nice drop going on here. So that's why I think it's a good buying opportunity here. This is a great stock on a discount here. As you look through here, I love to see the monthly performance pattern just for me to understand, whether I can buy the stock at these levels. Look here, right now stock price is $83. Huge big drop here in 1 day, 5 day, 10 day, and 1 month. In 1 day, 14% drop. Look here, we got 2021, 2020, 2019, all the years on the top here. We got months here, December, November, all the way to January. Keep watching. Anytime there's a drop here, 2020 in March, they dropped here. I think at this time we covered this stock once. Nice bounce back. Dropped in July, nice bounce back. Now there's a drop. Keep watching. Pattern is something similar. Back in 2019, 2020 March, they dropped here. Nice bounce back. Keep watching. We got some drop here. Nice bounce back. Anytime they drop big time, they always came back nicely. That's why I feel this time is no different. I think we should really buy this stock here and accumulate. So with that, let's jump in here and look at the stock chart here, understand the technical point of view. From a technical perspective, look here, we got a 5-year weekly chart. I think this stock took off, from 2020 onwards, never looked back. All the pullbacks here are all buying opportunities. Now there's a huge big drop here. I think it's a great buying opportunity. And as you look through a little bit shorter term time frame here, let's look at 1 year, 1 day here. Look, nice, huge, big drop here. And we had some drops along the way. All these drops are buying opportunities for this stock. Right now, RSI is low. That tells you right now, there's a selling pressure on the stock here. Implied wall is 16 here. Very low implied wall. For you folks who want to buy some call option, you can buy some call option, long-term call option here below the stock price, delta 70 or so. You can make some good money given implied volatility is low here. And from a DMI perspective, we like to see the blue line above red line here. Right now, as you can see here, we got a bearish crossover. The red line likes to cross over blue line here. That's a negative pattern here. That's why right now chart is ugly. That's when you have to buy the stock here. And if you look at the on the balance volume, you want to see on the balance volume rising or flat. Right now it's a little bit drop, which is expected because stock also dropped here. On the balance volume also drops along with the stock here, which is okay. And then you got check-in money flow. Check-in money flow will tell you what smart money is doing here. Now it's telling you smart money is going out of the stock here, which is very, very normal. When the stock drops like this will course correct as you go forward. Look here, huge big drop here. Jake-in money flow also dropped, then it came back up again. So no, this time it's not nothing different here. Chart is ugly. There is a blood in the market. We should buy some Celsius holding at this time and hold on to it. As you look through option chain here, stock price is 83. It's gone as high as $110 in 52 weeks. Right now, stock price is around around $85. Keep watching here. Look at the open interest here. We got $100 here, $105. Nice 198 contracts traded here. Even as you go further out here, $135. Nice contracts here, 109. So there are more folks in the options market betting the stock will go higher, and they're buying 105, even 135 strike price call options here. For April next year. If you look at the put side of the house, very low volume here, put volume, and very low open. There is some open interest, but not as high as call open interest. That's why in the options market, folks are betting this stock will go higher. And as you look through option statistics here, we got 9,800 call contracts traded, just 2,000 put contract traded. That makes the put call ratio as 0.25. Anytime you see put call ratio much below 1, that means that there is more folks buying the options, call options versus buying put options. As you look through here, VWAP, right now stock price is 83, VWAP is 88. That tells you this stock wants to go to $88 pretty quickly. That's why VWAP is 88 here. And IV percentile is very low. You could buy call options at these levels, longer term call options, maybe 1 year or even 100 days out, and take it from there. Overall options market is telling you it's a screaming buy here. Great time to buy. So with that, let's look and compare two big players in this market here. We got Celsius Holdings here, which is a new entrant, and we got Monster Beverage, which is a established company and a leader here. Let's compare these two companies and see what's better and go from there. So we got here Celsius Holdings, stock price is $83 as you can see here. We got Monster Beverage, stock price is 92. From a market cap perspective, clearly Monster is much bigger here, $48 billion market cap compared to Celsius, which is $6 billion. From an average volume perspective, we got 951,000 stock transactions, whereas Monster has got a little more volume. And then from an analyst recommendation perspective, analysts are recommending buy for both Celsius as well as Monster. I think overall, both stack very well. Monster being the leader here, bigger market cap, as you can see here, much bigger scale. And as you look through here, we got revenue. From a revenue perspective, Monster has got much bigger revenue, whereas Celsius is just a growing company here, new entrant. As you look through the revenue growth though, it tells a different story. Celsius is having a nice revenue growth here, 117%, whereas Monster is just 13%. That's the beauty of these upcoming companies, which are really taking the market share big time. That's why from a revenue growth perspective, quarterly, year over year, as well as 5 years, Celsius Holdings beats Monster Beverage by big number here. And now let's look at gross margin. Gross margin perspective, I think Monster is doing pretty well here. They also have a nice net margin, 28% here. I think being a newcomer here, they have to spend some money on their own operations and to build the product. That's why you see some lower net margin here. And as you look through here from a free cash perspective, I think Celsius has to do some little more good job on the free cash flow. I love to see this positive here, whereas Monster has a nice free cash flow here. That's a good way to go. From a cash perspective, these guys have got Celsius has got $84 million dollars here, whereas Monster has got nice $2 billion, almost $3 billion cash here. And debt wise, I think both companies have got low debt, which is completely manageable. And if you look through here from a valuation perspective, Celsius has got a little bit higher valuation compared to Monster. We got to be a little bit careful here. I love Monster's valuation here, just 9, from a price to sales perspective. Celsius is a little more pricey when it comes to price to sales ratio. From an earnings per share perspective, as you can see here, Monster is doing very well. They are earning $2.88 per share. That's a good news here. But our little company Celsius, it's also earning positive amount here, which is good. They can grow more rapidly, as you can see here. Nice revenue growth here. From an earnings per share perspective, look here, nice 132% earnings per growth next year. Whereas Monster, which is a little more established company, a little bit less earnings per growth here. But on the management effectivity side of the house, look here, nice double digit ROE and ROE for Monster. I love this number here. Whereas Celsius is still trying to improve here. I think they'll slowly, turn this around and get to double digit. They're not there yet. And from a relative strength index perspective, this tells you is it a good time to buy the stock from a technical perspective. Right now, it's a screaming buy for Celsius. It's oversold at these levels, whereas Monster is high. Anytime you see RSI above 60 or so, that tells you stock is hot right now. Not good time to buy. It's overbought. So from a market timing perspective, it's a good time to buy Celsius. But Monster, you got to wait a little bit, let the RSI come down here. From an IV percentile perspective, low volatility for Celsius at these levels here. You could buy some call option. Even Monster is okay here, low vol, but a little bit higher, almost double volatility than Celsius. And as you look through here from a performance perspective, we got Celsius Holdings 3-month, 6-month, nice performance here, but I think they did badly in 1 week, 1 month. But Monster is also struggling a little bit. Look here, 1 year and 5 year. 1 year and 5 year performance perspective, even 6 months, Celsius Holding handily beat Monster Beverage here. I think it's a great performance here. And then let's look at Morningstar ratings here. Morningstar is rating from a financial health perspective, both companies get a B grade here. Growth perspective, both get a B grade. Profitability perspective, Monster gets a grade here, whereas Celsius gets a F grade here. Given it's a smaller company, lower scale. So if I have to, do a quick nutshell, takeaway from this, from a company perspective right now, looking at right now, Monster looks much better. It's a bigger company. It's got better gross margin and net margin, especially net margin, as you can see here. But if you have to look at the future, where these companies might go, Celsius can grow much faster. As you can see here, revenue growth is much faster compared to Monster. That's why I feel this big huge drop in Celsius Holdings is a great buying opportunity, and company can really expand into other markets and gain the market share. It's becoming more and more popular. Its products are really flying off the shelf. That's why I feel Celsius Holdings is a great compelling buy here. Even though Monster has better numbers, but future is good for Celsius Holdings. Now, what do we do now? We looked at fundamentals, we looked at technicals. What should we do now? So let's quickly sum it up here. As you see here, Celsius Holdings, they hit their quarterly record almost by 50% from previous quarter. That's a great story here. And they did have some supply chain constraints. Despite of that, they beat their numbers handily. And because of this supply chain constraints, they had to take some sacrifice on the margin side, approximately 7.5% hit on the margin. Wall Street did not like it. And they also, invested money into the 6 orbit distribution warehouse here. That's a good story. It's one of the reason why they took some margin hit here. But investing in the distribution center is always good. That will give them the scale that's required. And as I look through here, they did very well. Their Celsius brand is really getting some good recognition here across the board, and there's a good revenue growth. And they're expanding. There is a store addition, SKU expansion, international expansion. Great expansion story here. And as more and more fitness places are opening up, I think this product, Celsius, can really do well here. Right now, they're already reaching triple digit growth here, but it can even do much better. So, in a nutshell, Celsius Holdings big, huge drop. Wall Street freaked out, and we have seen the movie before. Whenever it dropped like this, it always rebounded. With that, I recommend buying and accumulating this company and take it from there. So, with that, thank you very much. Happy investing and trading. Have a good weekend.